Glencore doesn't take positions in small explorers for fun. They're one of the most commercially ruthless commodity businesses on earth. Every year they evaluate countless of opportunities. Most get ignored, some get partnered, but very few receive meaningful commercial attention. Now, here's something I found interesting. In northwest Queensland, Glencore already has a direct joint venture interest in one project. And nearby, they have a binding tolling and offtake agreements tied to another. Now, that doesn't automatically mean anything. Major mining companies look at opportunities all the time. Most never become mines, but it did make me ask a question. What exactly are they looking at? Because it wasn't gold, it wasn't copper, at least not primarily. It was a metal that most mining investors have probably never owned. A metal critical to jet engines, defense systems, rocket technology, and one whose price has more than doubled in barely a year. That metal is rhenium. Now, that's where the story becomes interesting because one Australian company controls what it describes as one of the world's highest grade, undeveloped rhenium deposits. A deposit containing approximately 84,000 kilograms of rhenium, and sitting behind it is a company with a market capitalisation of roughly $46 million. I'm Amo. I'm an Australian geologist, and for the past decade, I've worked in Australian mining. Here we break down mining companies using geology, mining, economics, district scale context, rocks, numbers, no hype, no BS, and no financial advice. Always do your own research. Today, we're looking at Hammer Metals. ASX ticker is HMX. Current market cap is $46 million as of the 2nd of June 2026. Some of you may have noticed that I'm in a different filming location. I'm currently in Tasmania, and it hasn't stopped raining for the past week. The issue is, the content can't stop, so my brother has kindly lent me his studio. Now, really quick, the Ore Report is available. In the report, I break down individual mining companies on a monthly basis. If you're interested, the link is in the description. Now, to understand why I think Hammer Metals is so interesting, we first need to understand why the rhenium market has suddenly started getting attention. Now, before we talk about Hammer Metals specifically, we need to talk about rhenium, because I suspect most investors have never looked at a rhenium company before. And honestly, that's not surprising. This is not gold, it's not copper, and it's not lithium. Most people could spend their entire investing lives without hearing the word rhenium, yet it's one of the most strategically important specialty metals on Earth. The reason comes down to heat, extreme heat. Rhenium has the second highest melting point of any element. Only tungsten ranks higher. That makes it critically important in applications where materials are expected to keep performing under enormous thermal stress. Think jet engines, think rocket systems, think high-performance defense applications. These aren't environments where equipment can simply fail and be replaced later. The materials need to work, and in many of those systems, rhenium plays an important role, which is why the metal was included on the US Geological Survey's final 2025 critical minerals list. Now, here's where things start becoming interesting because, unlike copper or gold, you don't really just go out and build a rhenium mine, at least not normally. Rhenium is typically recovered as a byproduct during copper and molybdenum processing, and that creates a structural problem because when demand increases, supply doesn't necessarily follow. The people producing rhenium aren't usually making decisions based on rhenium. They're making decisions based on copper or molybdenum. Rhenium just comes along for the ride, which means global supply can be surprisingly slow to respond when the market conditions tighten. And that's exactly what we've been seeing through 2025 and into 2026. Rhenium prices moved dramatically higher. The metal rose from roughly $2,500 US per kilo at the start of 2025 to approximately US $6,400 per kilogram by the end of the first quarter of 26. And prices have just continued climbing, recently pushing beyond US $7,000 per kilogram. Now, whenever a commodity more than doubles in price in a relatively short period of time, I start asking the same question. Who owns the deposits? Because that's often where the market starts looking next. And that's where Hammer Metals gets interesting. Now, to understand why rhenium shows up at Kalman, you need to understand porphyry systems. Porphyry deposits are the world's primary source of copper and molybdenum. They form when the large magmatic intrusions push metal-bearing fluids into the surrounding rock over millions of years. The result is large disseminated zone of mineralization spread through hundreds of millions of tons of rock. Individual grades are often modest, 0.5% copper, maybe 1%. But the sheer scale is what makes them economic. That's the fundamental difference between porphyry and orogenic systems. Orogenic gold deposits, The classic narrow vein systems are structurally controlled. Mineralization is concentrated in discrete veins driven by tectonic deformation rather than magmatic intrusions. High grade, but narrow, irregular, and harder to model. They typically require underground mining, which means higher cost per tonne and more geological complexity at the face. Porphyry systems are the opposite. Lower grade, but predictable geometry, consistent distribution, and massive tonnage. That predictability is what allows open pit mining at scale. You can model the ore body, plan the pit, and run a bulk operation efficiently. The economics work at lower grades because the volume compensates. At Kalman, the mineralization is described as intrusion-related hydrothermal molybdenum rhenium copper gold mineralization, hosted by calc-silicate rocks. It sits within the eastern succession of the Mount Isa inlier, adjacent to the Pilgrim Fault Zone. That geological address matters. The Mount Isa district has produced copper, lead, zinc, and silver for nearly a century. Copper and molybdenum concentrate in shells around the intrusion, and rhenium, because of its geochemical affinity with molybdenum, substitutes directly into the crystal structure of the molybdenite. So, where you find high-grade molybdenum, you often find rhenium riding along with it. The company's flagship asset is called Kalman, located within the Mount Isa mining district, and according to Hammer, Kalman remains one of the world's highest-grade underdeveloped rhenium deposits. The current resource contains approximately 84,000 kilograms of rhenium. Now, before anyone gets too excited, contained metal isn't the same thing as recoverable metal. Mining is never that simple. But what really caught my attention wasn't the rhenium by itself, it was what the rhenium is sitting inside. Because Kalman isn't just a rhenium project, it's a much larger copper, gold, molybdenum system, and that's where the story starts becoming a lot more interesting. Hammer controls approximately 3,600 square kilometres across the broader Mount Isa region, and importantly, Kalman is owned 100% by Hammer. No joint venture partner, no earn-in, no complicated ownership structure. That's worth noting because, as we'll see in a moment, Hammer has attracted some serious partners across the rest of its portfolio. They've done it without giving away a piece of their flagship asset. Now, let's talk about scale. The current JORC resource sits at approximately 39 million tonnes at 1.0% recoverable copper equivalent, approximately 420,000 tonnes of recoverable copper equivalent, and approximately 84,000 kilograms of contained rhenium. Now, resource size alone doesn't tell us very much. The mining industry is littered with deposits that never become mines. The question I always ask is, where does the material sit? And one number immediately jumped out at me. Approximately 71% of the Kalman resource sits within the open pit domain. Generally speaking, open pit tonnes are easier to develop than deep underground tonnes. Lower mining costs, lower complexity, fewer things that need to go right. But then I found something even more interesting. When Hammer increases the cutoff grade to 1.5% copper equivalent, a very substantial higher grade core emerges, around 10.5 million tonnes, grading at 1.98% copper equivalent, 0.83% copper, 0.45 grams per tonne gold, and 4.8 grams per tonne rhenium. And that's one reason management continues to describe Kalman as one of the world's highest grade underdeveloped molybdenum and rhenium deposits. Now, using current commodity prices, Hammer estimates that average potential revenue per tonne has increased by approximately 70% compared to the assumptions used in its 2023 resource work. Same deposit, same tonnes, same metal, potentially 70% more revenue per tonne. And that's exactly why the company is now updating the resource and advancing scoping study. Resources are models, drill holes are the reality, and if Kalman really is one of the world's highest grade, underdeveloped rhenium projects, the drill bit should know that before the market. So let's look at what Hammer has actually been pulling out of the ground. The standout hole from the current drilling campaign is K162, and honestly, this isn't the sort of intercept you normally expect to find a company valued at roughly $46 million. K162 returned 124 metres, grading at 2.2% recoverable copper equivalent from 186 metres downhole, including 0.54% copper and 0.36 grams per tonne gold, 0.29% molybdenum, and 5.6 grams per tonne rhenium. But the headline number isn't what caught my attention. It was what was sitting inside it. Buried within that broader zone was a 30-metre interval grading at 3.98% copper equivalent, including 0.83% molybdenum and 16.8 grams per tonne rhenium. Not just copper, Not just gold, significant molybdenum, and significant rhenium. Then, further down the hole, Hammer intersected another 58 metres grading at 2.44% copper equivalent, including more than 1% copper and nearly 3/4 of a gram of gold per tonne. The maximum individual sample within K162 returned 49.3 grams per tonne rhenium. Nobody values a deposit using a single sample, but it does tell us the rhenium is genuinely showing up meaningfully. These aren't trace amounts. And then there's something else I think many investors may have overlooked. Not all of the assays from K162 have been reported yet. There are intervals within the mineralised zone that were assigned a 0 grade because the laboratory results had not been returned when the intercept was calculated. The hole everybody is discussing today already contains sections treated as 0. The final result could end up stronger than what's currently being reported. Now, let's talk about repeatability. Historic hole K153 returned 89 metres downhole, grading at 1.74% copper equivalent from 143 metres, including 24 metres grading more than 5% copper equivalent. Broad mineralisation, strong copper equivalent grades, meaningful molybdenum, meaningful rhenium, same system. Then there's K106A, a deep hole that intersected 7.6 metres grading at 23.4% copper from 581.65 metres. Not representative of the overall deposit, but it shows the system is capable of generating extremely high-grade zones, and high-grade zones often drive project economics. Not the average rock, the best rock. The next question is who else is paying attention here? Geology alone doesn't build mines. Hammer describes its portfolio as having validation from major international miners, including Glencore, Sumitomo, Metal Mining, and South 32. Let's start with Glencore. Now, to be clear, Glencore's joint venture isn't on Kalman itself. Kalman is 100% Hammer owned, with no joint venture partner. But Glencore has taken a 49% interest in the Mount Frosby joint venture on a separate Hammer-held tenements in the same district. That's a meaningful distinction. Hammer has kept their flagship asset while still attracting one of the world's most commercially rigorous mining groups across the rest of the ground. Glencore isn't known for chasing geological stories because they sound interesting. Their business is built around identifying commercial opportunities. Then we have Carnaby Resources at South Hope. Hammer retains a 49% interest while Carnaby controls a 51%. And importantly, Carnaby already has a binding tolling and offtake agreements with Glencore International. Now, here's why that matters. If Carnaby moves forward with certain development decisions, Hammer becomes eligible for milestone payments, potentially up to $11 million. The first $5 million will be triggered by a decision to mine at Mount Hope Central or Mount Hope North. Keep that number in the back of your mind because we're talking about Hammer's cash position. Then there's Sumitomo Metal Mining, a company with more than 300 years of mining history. Through the Bull Rush joint venture, Sumitomo can spend $4.5 million to earn a 51% interest with pathways to increase ownership further. And South 32 holds an option to earn up to 80% of the Isa Valley project. Multiple sophisticated mining groups have independently decided Hammer's ground is worth spending money on. That's a signal worth paying attention to. Now, let's talk about the next major catalyst. The Kalman scoping study was scheduled to commence in April of 2026. This will be the first real attempt to answer the big question, can this thing actually become a mine? Management is evaluating a hub and spoke development concept centred on Kalman, potentially incorporating Overlander, Elaine, Lakeview and Jubilee. A resource update is also expected to support the study. It will incorporate recent drilling and updated commodity prices. No NPV, IRR, CapEx or OpEx figures have been published yet. The scoping study is still in progress, but the metallurgical recoveries they're working from are solid. 86% for copper and molybdenum, and 77% for rhenium, and 74% for gold and silver. The scoping study will be the first real economic framework around this deposit. That's the next major catalyst. Now, before anybody rushes off anywhere, we need to talk about the risks, because the risks here are real. First is the cash. At the end of March 2026, Hammer reported approximately $2.1 million in cash. The company reported roughly 1.65 quarters of funding available. That is not a large cash buffer. Management has already stated that future funding may be required, and the translation is dilution remains a possibility. Second, this is still a pre-revenue explorer. No operating mine, no production, no reoccurring cash flow. Third, part of the Kalman resource remains inferred. The company states that less than 35% of the open pit resource remains inferred and is drilling to improve confidence. Fourth, some recent exploration results rely on portable XRF readings that have not been independently verified by the laboratory. And finally, commodity prices. The Kalman story looks much stronger today because commodity prices are significantly higher than they were in earlier studies. If copper falls, if gold falls, if molybdenum falls, or if rhenium pulls back, the economics could look very different. So let's bring this back to where we started. A $46 million company, a deposit containing approximately 84,000 kilograms of rhenium, a metal whose supply remains constrained and whose prices have more than doubled in little more than a year. A 39 million tonne copper, gold, molybdenum, rhenium resource. A scoping study underway, a resource update approaching, additional drilling results still pending, and multiple major mining groups already spending money across the broader portfolio. Maybe that's enough. Maybe it isn't. But it's certainly enough to put Hammer Metals on my watch list because over the next 6 to 12 months, we're likely to get the first real indication of whether Kalman is simply an interesting geological story or the foundation of a future mining operation. I'm Ammo. That's Hammer Metals. ASX ticker is HMX. Rocks, numbers, no hype, no BS, not financial advice, and as always, do your own research, and I'll see you in the next one.